Hi, this is Scott Pulsini from scottpulsinitrader.com, and this is our third setup for the SI indicator educational course called Breaking Ice, nicknamed BI, and it's the third indicator setup. Let's go through this disclaimer here. Please read this quickly. Okay. So the breaking ice is a setup where the big money funds, banks, large firms take a stand with hidden iceberg orders and are run over, which many times is fuel for a move opposite of the iceberg, as the big money has to puke their position. One can initiate an order as soon as the market moves in the opposite direction beyond the iceberg and place their stop above or below where the iceberg took its stand, which is an aggressive trade. That's how I trade it. Many times the market will retest the area where the iceberg failed and then will continue in the opposite direction of the iceberg. It's called a retest fail. And one can initiate their trade once they see the area fail. That's more of a conservative approach to the trade. The theory behind this is that the big money that got run over is trying to scratch their trade as the market moves back to the area, as they've been proven wrong and need to exit with as small of a loss as possible. And this is based on my personal experience with this exact setup in my face. So many times when I was a larger scalper, where I can put on thousands of contracts, I would take a stand, like the big money does, and it wasn't as an iceberg back then, but either way, I would be run over. And the whole theory behind it, again, because it's a personal experience, where I would get run over, and then I would be basically holding my breath, praying that the market would come back to that area that I got run over, so I can scratch the trade. Many times praying to God above that would happen, so I wouldn't lose, hundreds of thousands of dollars. And it's the same premise that I've noticed with these icebergs, that when they do get run over quickly, and when it retests, many times it fails. But again, you can many of the times also initiate right when you see them getting run over in the right spots. So we'll go over some examples here. So this was crude oil. I don't think I put a date on this one. It doesn't matter. I mean, it's just over and over and over again, as you guys will see. But so this was a iceberg. Hold on here. This was a we call it breaking ice setup, where the big money took a stand on the buy side. So the hidden buy orders were below the book, and you can see this aggressive selling basically spinning into their big buy orders below the market meaning hidden, where they don't display it until a certain percentage is traded into, and then it displays as a limit order, which surprises the market many times. But in this instance, it broke right through the area. So this is a little scrunched up, but you can see here where it sold, and then this was the retest, the blue, and then the sellers came back in. Again, if I expanded this out a little bit, it'd be a little more clear, but you'll see in other examples where then you can initiate on this, selling, your stop goes above here. So for instance, this was right around, it's 36.20-ish, maybe a little higher, 36.22. Your stop can go above here. So this is an 18 tick trade here. But again, this is, our threshold for icebergs, either way, is 100 to 120 in crude. Let me see here. I don't have that up in front of me, but I think it's 100. So this is 2.5 times normal, right? So when it's retest and it starts to fail, you can get short, and you catch a beautiful 60 plus tick move here, right? So that's the premise of the trade, where these guys get run over, they take a stand at retest, they were wrong, they try to get out as much as possible, as many contracts as possible, and then it ends up fueling the move down. Second example is in natural gas, where the threshold is over 100, just like crude, where you see this is actually two setups in one. As we learn them, there'll be multiple, which you guys can see the power of multiple setups in the same areas. But So on this move down, we had the Dumb and Dumber. Everyone should know what the Dumb and Dumber is, where the dumb money pukes. It's immediately above. You can go long. So if you're long and you're holding it, now all of a sudden you see a breaking ice setup, meaning that the paper took a stand. You can see this big sell bubble here, and somebody had many 5 times normal, threshold normal, I should say, which is 100 in the natural gas, resting bid buy orders that got hit, and it just literally went right through it. And then here's your typical retest here, and then sells off. So again, you can wait for the retest, initiate here, stop goes above, and then you get a sell off. Good. This is a decent 20 tick sell off. After the close, many times you're going to see this big size like near the close, and it's still pretty relevant. Again, if you start seeing opposite, like a big buy iceberg, big sell iceberg, then you can't really make a decision right in that area. I mean, you want to wait for it to either move away or one way or another, and then retest, and then you can make better decisions. But just because it's the close doesn't mean the size doesn't matter. It doesn't mean guys aren't taking stands. So our next example is, let me get this up here, in E-mini S&P. You see the big sell iceberg here, which was 735. Our iceberg thresholds either way is 700 or more in the E-mini S&P, where you get the heavy selling. They tried to hold it up. Hold on one second here, sorry. They try to hold it up, breaks through, retests. Once you see the selling come back in, you're initiating your short here. Your stop goes above here, which is also confluent with good resting liquidity too. So you have both in your favor. Where now, so you're in here right around probably 7.5. Your stop goes right around 10.5, and you catch a 14 plus point move down. And then this goes right into a Titanic setup, which we've covered, where actually this is breaking ice as well. Sorry. So this was, clear this out here. I just have the wrong label on it. But this was buy orders that they were buying heavily, and there was a heavy sell iceberg here that lost, and it blew right through it. This is kind of the retest here, and then up. So again, this is supposed to be breaking ice as well on the buy side. So if you're just trading, literally you can be getting out at levels that you like or make sense to you. But if you're looking for your last piece to get out at the opposite signal, this was it, right? So you had the buy icebergs taking a stand here and moves down here, and then you have the sell icebergs taking a stand that got run over here. And both times you got the little retest. You got the retest here. You can initiate your long or get out of you would be getting out of your position here. But if if this is somewhere where you're looking long, you can also do that. But either way, this is telling you, of course you want 30, 40 point moves, but you let the market tell you what's actually really happening. And what you need to do is, when you see this and it doesn't hold. Now, if this would have come up here and you see the big buying and then continues, you can hold it and then keep your trailing stop above here. But this one, it just literally immediately blew. The icebergs were wrong, retested, gone. You're out of your position, or you can get long. Next example is this was 6S, which is the Swiss franc. We have the 53 buy icebergs taking a stand. Again, doesn't seem like a lot, but for the Swiss franc, over 50, anything over 50 is significant as our thresholds. So you had the selling into the big buy iceberg. They were immediately wrong. This one didn't even retest. They tried here, this blue bubble. Tried to retest, but it just was, you had a little bit of an attempt there too. This one was just straight down, right? So many times, more often than other setups, you will get the retest of the area, just because the big money will push it back there as best they can so they can get out of their position. But again, sometimes you're going to risk missing it if you're going to if you're going to wait for the retest. So, if you're aggressive, you're in the minute you see this bubble and it gets below there, you can be in right here and your stop goes here, right? So this is at the time, this was, if you're aggressive, you're in around 09, I would say that is, 09 or 10. Your stop could be above here, right around probably 18, so you're risking 8 ticks to make, 50 plus, 50 plus. Again, almost 6-7 times your risk on your trade. Next example is silver. Same thing. Heavy sellers. Icebergs took a stand here. Buy icebergs. 199. Our threshold for silver is 70. So you're looking at close to 3 times normal volume. Right here. Actually, that's the wrong one. Then you get your typical move away, retest here. Sellers come in. Again, right there, you're short. Stop goes above here. You catch a very nice move down. I mean, again, you guys can see this. It's over and over and over in all these markets. And you let the market tell you whether the iceberg's winning or not winning, right? So many times you'll see this big, as we've seen with the Titanic, you'll see the big red bubble, and then it just takes off blue bubbles, right? And then you're in long. And then, or you can wait for the retest. But this is... at no point are you questioning what's going on here where you're like, well, is this a Titanic? Is this a breaking ice? I mean, they took their stand and it was immediately below. It retested. Sellers came back in. You're short, right? Then you get out in whatever levels that you're looking at. There wasn't another setup down here. But, again, you're using your levels, VWAP, Fibonacci, whatever you're looking at to piece out of the trade. And, it's later in the day here, so you probably won't end up getting out. But you can hold the last piece for an opposite setup like we've talked about. The next example is this is copper. Breaking ice negative, meaning they tried to sell it. And the icebergs took their stand, 155. Copper is, if you see over 90 icebergs, that is significant. So you're almost twice that, right? And you get the move right below it. Here's your retest, per usual. Here comes the selling again. Your stop can go up here. Actually, the yellow's not working too well on this one, but stops here. Catch a beautiful move into the close, right? You can be getting out at, again, you can have different reasons to get out as long as you come up with your own criteria. This was in its liquidity and it kind of bounced off liquidity. You could be out right here. When it ran into this liquidity and you saw the buying come back in, around here you could be out. And, at the end of the day happens, so you weren't really costing yourself much. But again, once you initiate, especially later in the day, you're not always going to get an opposite side signal to get out of everything. So you want to be using, the other things that you've learned through Bookmap with the liquidity levels and, again, stuff that you look at to initiate or get out of trades. But you're not just getting out to get out, right? Get out for a reason. Next example is, this is corn, or I'm sorry, this is wheat, where you have, again, heavy selling. I don't know why that changes like that on me. Here we go. Heavy selling here. Big buy icebergs. Again, wheat is the threshold for wheat. Icebergs is over 110. You get 291, so that's almost 3 times as much. And the buy icebergs take a stand. It looks like it's going to go. Looks like it's going to go. No dice. So you would have been short, somewhere in here. Actually, this off. So you get, this happens so often, as you guys have already seen here. So you get the buy icebergs take a stand, a retest. The minute you see this right here, the sellers come back in, you're short. Your stop goes above here. So that is right around probably 514. And that's what you're risking. So you're risking, 3/4 of a point at the most, or a cent, I should say. And you catch a 3-4 cent move here. So again, it's not a ton, but in grains that's a decent sized move. And the areas whether where guys were taking stands and whether you're right or wrong, and you know where you're wrong. Another incredible setup. Next example is, this is silver. Double setups here. I think I showed this one on the Dumb and Dumber, but you had the Dumb and Dumber setup, 65 stops. That is anything over 50 stops is over our threshold in silver, and 70 icebergs, where you get the the sell off here. Right here. And then immediately above it, there's the blue bubble. You're in there. Your stop's there. This is the Dumb and Dumber setup again, and then you're into it. And then, so if you're long, you see a breaking the ice setup, where here's the heavy selling right into a big buy iceberg. Again, anything over 70 is above our threshold to look for trades. And once again, you get the exact same look. The buy iceberg loses, it retests, sellers come back in, and then you get the move down. And it actually retested again a couple times here, but again, it never went through that area. One second here. There we go. So it retested a couple times here, but again, you're risking, if you're in here, you're in probably 1832-ish, a little higher. You're risking up to here. You catch a nice move down. It's just the same setups over and over and over, guys. I mean, you can see it. It's in every market. A very high percentage of the time, you're going to get the retest. So you can always even be more conservative waiting. Again, these guys that took the stand are wrong. When it comes back, they're peeling out, and then that's what causes the down move. And then every subsequent move up keeps getting hit because the guys that took their stand there, initiate to try to cover. So they're like, okay, I was wrong on this buy. When it comes back, I'm selling. When it comes back, I'm selling. When it comes back, I'm selling. And then it finally gives. And then our final example is, this was actually a Twitter setup that I put out, but it's very significant. It's a little different look. Again, sometimes you're going to get different looks in these things, but again, you can see this was a range of an area of huge icebergs that came in right in here. Again, these are all over 1,000 in different levels. So this was all the way from 42 and a half all the way down to 35. That's 7 points of icebergs basically taking a stand right through them, like hot knife through butter. Does its retest. I mean, you can see my actual connotations here. Retest, fails. You can get in there because that was the real first chance to get in. And if you're in here, you're risking on the retest, and then it starts to sell off here. Over here. You're in here, and you got to risk probably close to 8 cents, but you catch a 30-point move, right? And then this is just some added stuff where once you guys get used to trading the SI indicator liquidity. Now here wasn't really a setup as far as the SI tracker is, but this is a little bonus for you guys, which you guys should mostly know. I mean, there's nothing here per se, but this broke through liquidity here. Same thing. Here's the retest and reinitiate. So again, if you're short from up here, right, which you would have been if you follow the signal. Now you say to yourself, I mean, one of your parameters for one of your rules for getting out a portion of your position may be, hey, if it comes to liquidity and it fails, then I'm out, right? But this never gave you a reason to get out. It was right through this red bubble, was right through this liquidity. Then it came back. So you can add your stop right here. You say, okay, if it comes back and trades to this liquidity, I'm out. I'll take a small winner, a 5-6 point winner. But it never got above, and then it reinitiates. So you can either just be holding on, or you can even actually put on a trade based on the breakthrough retest of liquidity. Now you're in the two positions, right? And then the same thing happens here. This time it gets to the liquidity. It looks like it's going to break through, but then the buyers re-engage and you're out right here. Right? So you can see how you can use this stuff to help time because you're not always going to get an opposite signal to be getting out of your entire position. So, you can be using this liquidity, this heavy resting orders when it struggles as part of your reason to be getting out of some. But you're not just getting out to get out, because if you just got out to get out, you would have cost yourself a 30-point move. So that is the breaking ice setup, And again, very, very powerful, just like the other ones. It's always a very powerful setup if paper takes a stand and is wrong because they're the big money. So I will be back with our fourth setup. Thanks.